Welcome to the Pot.Live Podcast. I'm your host, Lenny G. This podcast is all about connecting the community with the thought leaders of business and entertainment in the cannabis industry. As this industry expands and becomes more and more mainstream, we want to educate and entertain our listeners and become your choice and voice for all things cannabis. Thanks for joining us and enjoy the show. Have you visited MJ.com? MJ.com is the online destination where you can find everything you need to know about the emerging legal marijuana industry. Where else can you find the latest original content, news, and trends? Connect to a local doctor to obtain your medical marijuana card, receive exclusive brand savings, and have your favorite product delivered straight to your front door? MJ.com has it all. Go check them out. Welcome to another episode of the Pot.Live Podcast. I'm your host, Lenny G, and we have a returning guest, Mr. Matthew Carr. He is the Chief Trend Strategist for the Oxford Club, and you can find him all over the internet. He's going to tell you all the different ways. I like watching him on Profit Trends on YouTube, but he'll tell you a few more ways. Matthew, welcome back to the show.
Hey, thanks for having me, Len. Yeah, and everybody can always find me on Profit Trends on YouTube, at Matthew S. Carr on Twitter, Strategic Trends Investor on Instagram, Profit Trends on Instagram, and both of those on Facebook. So we're all over the place. And you can always check out profittrends.com, which is our free e-letter news site.
Beautiful, beautiful. And I advise everyone to check it out. I've been following Matthew for several months now, and you made me some money, buddy.
That's always my plan.
All right. Speaking of money, this was a big week. We're recording this in mid-November when all of the big cannabis companies reported earnings. So let's hit them one by one, Matthew. Let's start with the big three, or that used to be the big one and the other two now, I think.
Yeah.
Let's start with the big one, which is Canopy. That seems to be holding its head above water way better than the rest. Let's start with what you thought about their earnings and their stock in general.
So Canopy is one of my favorite companies to own. I think they had a pretty solid report. You saw a 75% increase in revenue to about $102 million. You still have these big losses, albeit those losses are smaller than what we've seen in years past. And the new CEO has come in and tried to, rein that stuff in. But Canopy has been, one of the better performers in the Canadian licensed producer sort of sector. I still to move on up to $40 and $60 because, it has that big international footprint. You have all of those celebrities, Martha Stewart, Seth Rogen, so forth and so on. That's really great for its brand. And then trying to get into the US, through CBD, with Martha Stewart as well, and hemp production. So I like Canopy. I thought Canopy had a solid report. We saw a little bit of a dip on that report. I think it was about, 4 to 5% pullback. But I still, of all the Canadian licensed producers, that is still my one that I would own.
Yeah. Obviously, they, like you said, they have the backing of Constellation. And any thoughts? I think we might have talked about this last month when we did an episode, but the thoughts about the Acerage deal. So people are trying to play that arbitrage, but they don't know if it's going to happen. If you can just talk a little bit about that for the people that aren't familiar with that deal.
Yeah. So a couple of years ago, Canopy agreed to buy Acerage Holdings. They've again scaled back that deal. The details I'm not super familiar with at the moment. I've kind of, because it has been.
I think Acerage, if it goes federally legal in the United States, It kicks in where they buy 70% of Acerage, their fixed shares, and you get 0.30 and change of a Canopy share. And right now, that's like a double. It's like 100% return if you bought Acerage and that deal goes through. The risk being, is it going to go through?
Exactly. And so I think last time I was on here, I said, I still like that deal. I still like that play. I used to, in one of my services, we used to own both Canopy and Acerage. We did get stopped out for gains. So I think there is an opportunity there. I think your outlook for that has greatly improved just over the last couple of weeks because, we're looking at Biden-Harris taking the White House. You have these 5 states that have now passed all of their legalization ballots, measures on the ballot on November. This is an expanding market. I think you eventually see something on the horizon here at the federal level just over the next couple of years here in the U.S. I know the House plans to pick up its more active vote next month, which that was supposed to take place before the election. They pushed it till afterwards. As I said before, that will easily pass the House. Has no problems passing the House. That the Senate is going to still be that key sticking point, and we won't even know what the Senate is going to specifically look like until mid-January.
Yeah, and I think there are a few Republicans that are in favor of cannabis. So if it's close, which it's going to be 50-50 or one or two the other way, maybe it'll pass even bipartisan in the Senate. Who knows? We'll see.
Yeah, you'd like to see that, but we have seen it be a little bit of a partisan issue just recently, where Mitch McConnell has definitely worked to make sure any sort of bills that passed the House basically were stonewalled or put away in the closet in the Senate, that they just never received the light of day.
Yeah, it's a lovely time to be part of this country, isn't it? Anyway, let's move on from that. All right, let's talk about the other two that used to be big and have now been a mess, Tilray and Aurora, which are popular with the Robinhood traders, and the momentum, up and down, it moves all over the place. I don't know if you want to lump them together or take them each one by one. You tell me.
Well, I'll take them one by one. Aurora definitely, just as you said, is a complete mess. All right, this is a company that, last quarter, the results, they talked about how the illicit market was back, and that was eating into results. Well, this quarter, you saw a 10% decline in sales to about $51 million. You saw another loss swell to $81 million. I think that company is in trouble. Now, I'm going to set aside the share price movements for a second, because they then followed that up with an announcement of a secondary offering at $125 million, then upped it to $150 million. So you had this whole reverse split earlier this year, soak up all that extra liquidity, and then you turn around and go back towards dilution.
They're just digging the hole deeper.
Digging the hole deeper. For me, Aurora scares me, and I think it should scare anybody, especially any sort of retail investor. A healthy stock does not jump 66% one day and then crash the next. And this is what we've seen from Aurora. It has these big, huge spikes one direction, and then that is completely erased the next day. So that's something where, for me, my alarm bells go off. And so Aurora I think is a mess. I would still continue to kind of steer clear from that. I think it's going to be very hard for an average retail investor to make any kind of money on it, because there are all these other forces at play that you can't control and may not completely understand.
And I think that the reverse split was like 7 for 1 or 1 for 7, right?
Yeah.
Yeah. So really, that stock's trading, as we're recording this, like at around $7. It's really less than $1 stock a couple of months ago, right?
Yeah, and the reverse split was just to make sure that it wasn't essentially going to be delisted,
yeah.
Right? Because that was one of the things I'd written earlier about this year, the companies that I felt were at risk of being delisted, and Aurora was one of them, because its share price was below that dollar range. And if any company that's on a major exchange, if your share price is below $1 for 30 days or more, you start getting a warning. You have to pick it back up.
Yeah. All right. So how about jumping to Tilray?
Tilray is kind of Tilray is a mix between Canopy and Aurora. Right. So it's not as big of a mess as Aurora. We did see that sales actually increased about 7%. It does have a loss, but I find it's very hard to be excited about Tilray at this point. It was one of those companies that, when it first IPO'd a couple of years ago, I thought was a very good opportunity. It has since then kind of eroded that goodwill. And I think Canopy continues to be the only Canadian LP that I would consider owning at the moment. I will say the other part of the big seven, Aphria, I think is kind of a company to keep an eye on. Sales increased 16%. It has been a company that is really focused on controlling its cost, and it has bought that brewer, the Sweetwater Brewery here in the United States, to kind of enter this market. It has that international footprint, especially in Germany. Organigram, Hexo, Kronos, these are all smaller players. Hexo and Organigram, I do like those companies. Hexo is below $1. organic gram is below $2. So for me, those are all worth watching. Right now, the way my view on the Canadian market side of it is, this is a year maybe to kind of sit back and watch. That's what I've kind of stressed. You've had this Cannabis 2.0 launch that has really been, kind of a bumpy road and sort of problematic, exacerbated by the pandemic. And you're not really seeing anybody take charge except for Canopy. So this is the year where I'd be watching the Canadian producers kind of taking down some names. Again, Canopy is fine for me to own. And then look for kind of like a turnaround, maybe middle of 2021, that maybe we can start seeing them pick back up, because they are so beaten down at this point.
All right, let's talk about an MSO in the United States that reported this week, Green Thumb, symbol GTBIF, I believe, in the U.S. market. Can you talk about that one?
Green Thumb is one of my favorite companies. It's actually, you saw 131% increase year over year to $157 million. This is now, it keeps setting this high water mark for American MSOs. This is the third straight quarter of 100 million plus revenue. That's something, again, I always point out, when you look at Canadian producers and you look at the American MSOs, that's something to look at. Like, these companies the American MSOs are producing revenue that isn't matched anywhere else in Canada. So I love Green Thumb, and I actually think this is one of the best opportunities for that market expansion. With Arizona and all those states approving, not just adult use, but also medicinal use down in Mississippi. Green Thumb is, I put it as like it's my number 2 MSO in this country, because it has those 48 dispensaries in 10 states. It is the number 1 operator in Pennsylvania, which I think has to go adult use. Same thing with Connecticut. And then it has this growing presence in New Jersey. So I actually thought this was a very good report for Green Thumb. Shares are near these all-time highs for the company, and it has had just this fantastic 2020. And I think that, again, is that divergence. This is an example of the divergence between American MSOs and those Canadian licensed producers. Green Thumb is a perfect example of that.
Got it. I think a smaller or lower share price company, Harvest Health, I think they reported this week. I don't know if you're familiar with that one.
Yeah, Harvest, so you had about an 86% increase in revenue to 61.6 million. This is another kind of like interesting company. Over the last couple of years, you have 37 dispensaries in 7 states. But this is a company that I actually like with those with the November 3rd results, because Harvest is heavily invested into Arizona and Pennsylvania. Of those 37 dispensaries, 15 are currently in Arizona, another 5 in Pennsylvania. It just got approval for another 3 licenses in Arizona, so it takes it up to 18. So I think this is a very strong company. It's the number 1 operator in Arizona. It's number 3 in Pennsylvania, behind Green Thumb as well as Curaleaf. So I do like this company. It's trading at a much lower value than maybe some of its other competitors like Green Thumb, Curaleaf.
Well, they got some debt, right? I think they have over 200 million in debt, so that probably depresses the share price a bit.
Yeah.
People get nervous with that. All right, let's talk about, I know it's one of your faves, and it's one that you turned me on to a few months ago. Pick and shovel play, GrowGeneration has been off the charts.
Dude, so GrowGeneration is, one of my favorite plays on the American cannabis industry. It has been my number 1 small cap for 2020, and they improved once again on earnings. We saw a 16% increase as we had a record revenue to $55 million. It also raised 2020 guidance to $187.5 million. It then raised 2021 guidance again to $290 million. So this is the largest hydroponics retailer in the U.S., operating 31 locations in 11 states. You've seen double-digit jumps on first, second, and third quarter earnings now this year. The second quarter result, we saw that massive, like 40% jump. So I love this company. I like it. Shares are up they're now up 500% year to date, and 2020 has been just a killer company. And I like it for, again, this is expansion of the US market, because it is this hydroponics retailer. As the US market continues to grow, it grows along with it. It can also, its business kind of increase exponentially, because not only is it these new markets, but then you have these new companies that are coming in and are buying its products. So GrowGeneration killed it. I love that company. I think it's a great company for the horizon for the growth of the US market.
Yeah, I know you recommended that to us on our first episode, I think in July, at like $7. It's up to about $25. So I thank you. So don't send me an invoice, but thank you very much. And that's another strange one that people I don't think believed in a lot during the run-up, because it ran from like 7 to 18, then dropped back down to 12 maybe, and then it ran back up again. So it's like, do people think it's for real? You know what I mean? Like, why do you think there's such fluctuation when it's killing it every quarter with earnings?
Well, I think part is profit taken. And the other thing that I talked about this week, because we saw this big pullback along with, Aurora and Tilray, there is some confusion, right? That it gets mixed up with those Canadian licensed producers. I think a lot of times, younger investors or newer investors to the cannabis market, they don't understand that companies like Canopy, Aurora, Tilray, they don't operate in the United States for the most part. They might operate maybe like Canopy, like a CBD segment. But for the most part, they don't operate in the US. They can run up on the hopes that there may be a change at the federal level, but not because of the expansion of the US market. Now, GrowGeneration fell along with everybody else this week when they reported their earnings. GrowGeneration has nothing to do with those Canadian LPs. GrowGeneration is an American company operating in 11 states here. And so I think that's where a lot of that confusion and volatility comes from, because all these companies kind of report. We got the last couple of weeks, and in the next week, we're going to have like the really all of our cannabis earnings season, and it's going to get really choppy. But GrowGeneration is a fantastic play on the growth of the American cannabis market, and that's all it is at the moment. And I love it, and I think there's still plenty of upside.
So that's a long-term hold for you. Like, just put it away and just watch it grow, basically.
Yeah.
All right. So here's what we're gonna do. We're gonna have some fun. We're gonna make fun of me, but maybe make some good information for me as well. So I'm gonna be selfish and unselfish. I'm gonna give you my cannabis portfolio, what I hold. You tell me at these current levels, buy, sell, or hold. You
okay.
Ready?
Yeah.
All right, buddy. Here we go. First, we're going to start with Canopy, but I think I know your answer there. So Canopy is now trading at, let's see, I'm looking up to the minute, 23 and change.
I think you can continue to hold that. If you can also maybe possibly add to your position on any dips below that $20 level, because I do think that this has the potential to go back to the $40 and $60 level that we saw a couple of years ago.
Got it. All right. GrowGeneration is another one. It's now, wow, just past 26 as we're recording this on Friday, November 13th, just anyone who's listening. It just went over 26. You holding, you taking profit, or you adding?
I would hold at the moment, because I would expect a little bit of a pullback from this level. So because right now we're hitting new all-time highs, there's going to be some profit taking here, especially with the run-up this week. I mean, you talk about the move today, that's what, 7-8% on top of the 16% move we saw on earnings yesterday. And on earnings at one point, it was up over 20%. So
it's over $1 billion market cap now, which is amazing.
Yeah.
Excellent. All right. So that we know you like those two. Planet 13, it's about $3.50. They've been growing pretty nicely. Tell me your thoughts on that one.
Planet 13 is, man, it just sounds like I love everybody, but Planet 13 is another company that I really, really like. I have talked before and been very open about the Superstore in Las Vegas is my favorite dispensary here in the United States. Bob Grossbeck, I've talked to him and interviewed him many times over the years. He's always been very open. I like their plan. Their business model is going to be a little bit different then some of the other MSOs, they're going to be focusing kind of on the Dave and Buster's sort of experience. So their superstores are big. It's not just a dispensary, but it's, also an art museum, a cafe, an interactive sort of cannabis playground where you can kind of sit there and hang out. You can see stuff being made. You can see stuff being processed. You can see them like their drinks and their gummies being formed. So I actually really, really like Planet 13. The Nevada market, that Las Vegas market, is really set up for adult use cannabis. And the superstore in Las Vegas accounts for roughly 10% of all cannabis sales in the state. So I think that's another one that it's a long-term hold. And it's going to continue to expand across the U.S.
And you think when the world gets back to normal and people are hitting Vegas as they used to, that's going to be a huge destination, that superstore.
Yeah. So, and that's what I was about to say. Like, I think that's the one thing that has kept the prices a little bit in checks this year is the pandemic, because travel to Las Vegas was so depressed. It's kept those prices in check. But I do like this company for the long term.
All right, a little different angle. An ETF, the advisor shares MSOS symbol. And then there's the one MJ symbol, which we like that because we feature this on MJ.com. There's a little plug. Which, do you like either of those or both or none? Are you familiar with them?
American ETF, American Multi-State Operator ETF. This to me was pretty exciting because a lot of times ETFs have been so focused on a lot of Canadian companies. This was an ETF that was going to be completely focused on American multi-state operators. It also owns GrowGeneration. I believe it also owns Innovative Industrial Properties, which is another excellent real estate investment trust for the sector. So that has always been kind of, since they just launched that, and I believe it was September was when it launched.
Yeah, a few months ago. Hold on, let me look. I'll tell you right now. Yeah, September, correct. And it ran up from, it dipped down to like the low 20s. Now it's at 29 and a half.
Yeah, so that has been my sort of play. Like, if you don't want to go out and pick a winner, like you don't want to pick individual companies, that is a good one, because again, it's going to be focused on those American companies. And if you don't have access to OTC trading, then that's another opportunity to get exposure to those American multi-state operators.
All right. Now, I'm embarrassed to say I hold the next two because I know your answer already, but buy, hold, or sell. Tilray and Aurora. Get rid of them?
I like I said, I would, depending on you, well, let me say this. We always believe in using trailing stops, making sure that you're not letting a loss become something that's going to be destructive to your financial future. With that being said, if you have a small stake in Aurora or Tilray, like it's nothing that's really hurting your overall portfolio, you could wait to see what happens.
But you're not buying it right now.
I would not be buying it. I think there's probably a little bit of a leg lower for both of those. That's what it feels like to me. And then I might be kind of nibbling at that point. I don't want to be like, for me right now, I'm not taking big bites of any Canadian licensed producers, but I think it's fine to look at these companies that are at lows, or once they hit lows, to then begin nibbling and kind of
almost put them in your speculative bucket, right?
Yeah.
Like if you want to take a shot on some of these, because they do have these run-ups, but nobody ever times them right because they run right back down. So that's the scary part of it. So put them in the speculative bucket, I think, is what you're saying, maybe.
Yeah, and that's the interesting thing that has happened just over the last couple of years. I've been covering this industry for several years now, and in the beginning, the speculative plays were all the American multi-state operators, right? They all traded OTC. They still all trade OTC because of federal regulations here in the U.S. And your Canadian companies, those were all your blue chips. Now I think it is largely, as I say, it is.
Yeah, the U.S. MSOs are making a profit, a lot of them, and the Canadian companies aren't even close.
Yeah.
Right. Incredible. All right. You mentioned Hexo briefly earlier. I personally took a flyer on a long-term calls that I got real cheap, just as a flyer, speculative flyer. Does this thing have a possibility of going to zero? It's trading at like 75 cents. Or do you think there's some upside for a speculative play there?
I think it's fine to take a flyer on this. I don't know if it goes down to zero. I don't think we're going to see something, like CanTrust, but I do be a little bit concerned with that priced below a buck because of, listing requirements here.
Yeah, they've been talking about a reverse split too if they can't get over $1. I think I saw in one of their news releases.
Yeah, they're probably going to have to follow that route, and you just don't want them to see them do this route of doing a reverse split, then come back with another offering.
Yeah, Aurora 2.0. I got you.
Yeah, exactly.
I got you. All right, how about Curaleaf? I believe you like that one, but let's see what you say.
Curaleaf, this is my number one company to benefit from the 2020 election results. This is the number one operator in the United States, 95 dispensaries across 23 states. It is the number one operator in New Jersey, the number two operator, I believe, in Arizona, and the number three operator in Pennsylvania. So this company has not reported earnings yet, but because it closed that grassroots acquisition in July, this ballooned this company to very large. We're looking for way more than Green Thumb. Green Thumb, 157 million in the most recent quarter. I think you're looking for Curaleaf to report over $200 million in its quarterly report next week. I think this is a fantastic company. We actually do own it in one of my portfolios. So I think it's in the best position to benefit from the current environment and the current expansion of the U.S. Cannabis market.
And besides cannabis, they have a huge CBD presence nationwide too, don't they?
Yeah. And CBD has been, just a very interesting market this year. I've talked to a couple of CEOs. CBD companies have gotten beaten down simply because stores are closed.
Right? Yeah. And nobody knows which ones are real and which ones aren't because it's so new that people don't trust it, right? Because they see it in a gas station and then they see a high-end brand that they get marketed to. Which one's the real one, right? They don't know.
Yeah, exactly. Like, do you buy it at a dispensary? Do you buy it at this gas station? Do you buy it at DSW?
Right. Exactly.
Right?
Exactly.
But you are seeing success for CBD in those direct-to-consumer sales. And so I know Juicy, they just started doing that.
All right, now Green Thumb at $20. I know you like it. We spoke about it earlier. Do you like it at $20 or you wait for a pullback or you just hold if you have it?
I think it's this should be right around new all-time highs for it, right? So today, maybe look for a little bit of a pullback, but I wouldn't look for too big of a dip. That $17 to $20 range is probably a very strong entry point. If it starts making another leg higher, you don't want to miss out, I think, on that rally.
And one I did miss out on that I think you mentioned earlier, the IIPR, the Innovative Industrial Properties. That thing was down below 100 and I didn't touch it. I should have, man, because it was at, obviously, you can always say that, but it's at $156 a share and gives a nice dividend, I believe, as well, correct?
Yeah, so this is one of our foundation positions of our reefer retirement portfolio that we run. Curaleaf is also a member of that because this company, as that medicinal market expands, you now have 36 states that allow for medicinal sales. Innovative Industrial gets to expand to all those markets. Of its 4.9 million square feet, I believe 99% of it is already leased out. It pays this excellent dividend, and it has been increasing this dividend each and every year. Because it's a REIT, it is required to pay 90% of that back to shareholders. So this is, for me, this is.
Do you like it at this level, or has it run up too much? That's what everyone's always afraid of, right? They look at the chart and they see the steep incline and they're like, I've got to wait, I missed it.
Yeah, so I always, it's always tough. Now, they just reported earnings, so you had that big upswing from earnings there, as well as then the upswing from the election results, the upswing from kind of like whether there's a COVID-19 vaccine or not. So 156, that's also, I believe, an all-time high for shares right there. You could maybe wait for a little bit of a pullback, but I also want to say that a lot of times investors will get scared off by like a $100 share price or $150 share price. They're like, well, I can only buy, X number of shares, right? It's too much. Don't get caught up in that mentality. I think right now you've got this dividend. You can run this dividend reinvestment program on it. Those can continue to pay out. And I think that this is another company that has a very nice time horizon. It has a lot of upside ahead. There is always a little bit of concern that, let's say, if like the Safe Banking Act passes, whether that takes away some of IIPR's leverage and its sort of leaseback sales. But I don't believe so. I think this company is strong. You could, right now at 156, if it seems pricey after the big run up, after this euphoric market that we've seen this week, it'd be fine to hold on to it. But we have this as a long-term core holding until something fundamentally changes with its business.
Awesome. All right. Did I miss any big ones that reported earnings or anything that I didn't mention?
I think Columbia Care.
All right. Columbia Care. Yeah. They're I know they're in the Southeast United States and they're spreading across the country. What'd you think about them?
It's to me, Columbia Care has always been an interesting play because it does not get the headline recognition as sort of press than Columbia Care, but Columbia Care is actually, it's been growing. Its market revenue grew 64% in the quarter to 54 million. So that was good. But it now has, 76 dispensaries across the US and the European Union. So I think it's another interesting play on the changing landscape with these new states that have moved forward with legalization, because it's not one of the top players in each of those states. It's just more evenly spaced across all of these states. I believe it has like one dispensary in New Jersey, 2 in Arizona, and maybe like 3 in Pennsylvania and New York.
And they're opening several in Florida. I know that. Yeah,
and they're trying to get into this Florida market, which that Florida market is completely dominated by Trulieve. Trulieve, of all the cannabis companies, I did like Trulieve's approach, which was we're going to dominate this $1 billion medical market in Florida, and then once we've done that, we'll begin our expansion plans. So Trulieve is another great multi-state operator, has now, I believe, 71 dispensaries across 5 states, but 65 of those are in Florida. Like it is just now expanding into Pennsylvania with a recent acquisition. It's also in California, Connecticut, Massachusetts.
Yeah, they've crushed it down in Florida, where I'm located. They are the big player for sure, and their share price has done fantastic. So they've been growing nicely.
Yeah, and like I said, I like their plan to just kind of be, everybody else when they started out, there were all these acquisitions. They're trying to expand their footprint as much as possible, be in as many states as possible. And Trulieve was like, we're going to take this measured approach to growth.
Yeah, fantastic. All right, well, Matthew Carr, thanks again for being on the show. Chief Trend Strategist of the Oxford Club. Watch him on YouTube. I think you release a new video on profit trends on YouTube every week or so.
Yeah,
why don't you repeat all those other places they can find you?
Yeah, we release a video on YouTube every Friday afternoon at, I believe, 1:30. I'm also on Twitter at Matthew S. Carr, on Instagram at Strategic Trends Investor, Facebook at Profit Trends. So be sure to check us out. And like I said, be sure to check out my free e-letter at profittrends.com. Not only do we cover the cannabis market, but we also cover any sort of disruptive or new technologies. We get into cryptocurrency, AI, robotics, 5G, e-commerce, all that kind of stuff.
Oh, wait, I'll finish with one question. Bitcoin's at like 16,000, going up from here or down?
Believe it or not, I actually believe it's going up. Bitcoin was one of my plays for this year. Whenever you see this reward halving like we had this year back in May, it just drives the price crazy. So I think you could potentially see new all-time highs on Bitcoin.
Awesome. Matt, thank you so much again for being our guest, and we will see you next time on the show, hopefully next month, and we'll get your thoughts again. Thanks for all the value, my friend.
Thanks you.
All right, and we will see everyone next time on the Pot.Live Podcast. If you are into the recreational side of the cannabis industry, yes, stoners, I'm talking to you, then Pot.com is the online and mobile destination for you. That's right, THEPOT.com, thepot.com. Where else can you find the exclusive Pot Mate of the Month? Take a pot quiz and win prizes. Scroll through hilarious memes and jokes and check out the latest podcasts, news, and trends, all while having your own profile and voice in the Pot.com forum. Visit thepot.com. cannabis.com today and get lit.